Welcome to the Brisbane Property Podcast with your hosts Melinda and Scott Jennison.
Hi everyone, and welcome to another episode of the Brisbane Property Podcast. It's always good to have a guest on, and a frequent guest of ours, been on a few times. We've got Jonathan Bell. Welcome back, Jonathan.
Thanks, Scott. Thanks, Melinda.
And welcome, Jonathan. This time, Jonathan is representing his business under a new brand, and we're going to hear all about the new brand at the end of this episode, because you will recognise Jonathan's voice from previous podcast episodes, because he's shared his intel with our audience on a number of occasions, and their company has been through a big rebrand. So super excited to hear about that as well, Jonathan.
Yeah, looking forward to chatting about it.
So it's always good to get a bit of a different voice and to get a different sort of play on the market, and obviously the rental side of things. It's been pretty crazy out there how people have been lining up, people paying over, properties unavailable, vacancy rates are super low. We do a lot of work here at Streamline Property Buyers with investors, and obviously they fall into that space as well. So having someone like yourself, Jonathan, it's always handy to get that, so the investors get a bit of a feel of what's going here in sunny Brisbane.
Yeah, absolutely.
Yeah, I was just going to say, Jonathan, what are you finding? Because we are finding on the sales and purchasing side, between the end of 22 and the beginning of 2023, there's been a shift. What are you finding in the property management space?
Yeah, it's been a crazy 3 years. You've had the floods, you've had COVID, you've had the building crisis, there was the mold epidemic, the rental crisis with vacancy rates. So there's been a magnitude of things that have happened over the last 3 years. And I think in 2023, for the first time in a long time, it started to normalize. Migration isn't as big as it was. Vacancy rates are steady, below 1%. So I think finally it's like a little bit of time to breathe, where we're not seeing these incredibly crazy results, but we're also seeing the market continuing to thrive under its current conditions.
Gee, you brought back some memories there.
I know, traumatic ones.
It seems like a long time ago. And 12 months ago we had floods in Brisbane. COVID was around everywhere. I even forgot about the mold, actually, to be honest. But things like that, yeah, there's a lot of probably not great memories. And obviously memories how crazy the market was, as you said. And now, it's probably normalised, as you said. I agree.
Yeah, It's been really good to see, like, it's not because of all these crazy events that have happened, we haven't seen a backwards trend at all. It's still maintained its current status. So, which I think continues to show that with the vacancy rates the way that they are, I think that it's normalized, but also a really strong rental market for investors.
So are you still seeing people line up, for open homes when you were advertising a property for rent around the city?
Yeah, definitely. It's still really, really strong. As vacancy rates are less than 1%, there's not enough investment properties for tenants. We're just not seeing an example of one. This time last year was a property we have advertised for $1,250, and we ended up getting $1,650 because the insurance company were paying for the property because they had nowhere to live. So things like that are obviously not happening, but we're still getting the asking price, if not more, and people are still lining up.
Let's talk about that. I think you've highlighted or raised a really good point. And this can happen in the rental market just as much as it can happen in the sales market. Overinflated prices because of conditions on the ground at a particular point in time. And you mentioned a property there that achieved a huge uplift in the rent achieved. And that was off the back of the flood event, because you mentioned it was an insurance claim. Is that correct?
Yeah, correct. And also because vacancy rates are so low, they had no options. So that was the only property in the location they had to live that was available.
So that's a big market event, a significant weather event that displaced a lot of people throughout Brisbane. And so we saw a very short and sharp increase in demand for rental properties in the immediate weeks following that flood event. So we also saw a lot of rental properties that were available for rent no longer be habitable. So, we saw vacancy plummet simply because a lot of properties that were previously rental properties could no longer be rented. So we saw this significant shift, I guess, in what the number of properties available, but also the demand for people fighting out over a smaller volume of properties. So you were achieving some really significant results for property investors that had flood-free properties that people were relocating to because of the heightened demand off the back of a weather event.
Yeah, exactly. And we had investors that were getting 6 to 7% yields over the last 12 months because of that overinflated pricing. So, they were getting commercial rents for residential property. But obviously that was just a one-off rare occasion, but you can't obviously sustain that.
Of course. So are you or were you finding, just anecdotally, that a lot of those overinflated prices were being paid by the insurance companies of people that were, having to relocate temporarily?
Yes. And then you'd have the rare occasion where there's someone relocating that needed a 6-month lease before they bought, or they were relocating from interstate or overseas where they genuinely had no other options, and they were willing to pay well above the asking rent to be able to secure those properties. But there's not that same urgency now as there was.
So John, if it's not that urgent now, and you're saying it's a bit more normal, are we seeing tenants' expectations and landlords' expectations start to close that gap, and landlords not thinking they're going to get a really, really high amount and pushing and asking for an overinflated amount, and the same with the tenants? So we're seeing the tenants sort of meet that market as well when it comes to the rental side of things?
Yeah, definitely. I think that tenants have definitely over the last 12 months understood the rental market's increasing, cost of living in everything has increased, including rents. So we're not getting as much pushback from tenants. They're willing to pay the price for renewals. 12 months ago, we would say, hey, there's a 10% increase in your rents, and they're used to a $10 increase, not 10%. So there'd be a lot of kickback from them. But then what they would do is go to the realestate.com and Domain and look for a new property and realize that all the rents are higher. So they'd come back to us 2 weeks later and say, actually, we will sign. Now we're just finding that tenants are wanting to stay, sign 12 to 24-month leases to secure the property. And I think I spoke about this last time, like tenants trying to do 2-year leases because they're trying to not have an increase in price for those 2 years, which is quite smart on their behalf. And our feedback to owners off the back of that is, I believe 12-month leases are sufficient because it means we can continue to get rental increases over that period.
That's interesting. So you did see a heightened number of tenants proposing a 24-month lease to avoid any 12-month hikes in rent. That's smart.
And if they broke their lease, they'd be able to re-rent it so easily, because it's below market value when they relet it.
So Jonathan, you mentioned that you are still seeing, tenants line up to inspect rental properties when they become available. Obviously, when you're advertising a property for rent, there's a fixed amount per week that's advertised on the real estate portals. Are you still seeing some tenants offer more than the advertised price, or are they using some other form of incentive to put their application at the top of the pile for the landlord's consideration?
Yeah, I think due to the cost of living and interest rates and some of the sentiment in the market at the moment, people are a little bit more wary about the money that they're spending. And that reflects on the rental market as well. So we are noticing a little bit of realigning expectations. Typically, someone who wanted to spend $2,000 a week on rent may now want to spend $1,750. And that goes all the way down the market. And someone who said, I need a pool, is willing to go for the next 12 months without a pool, or ducted aircon to split system, like realigning those expectations. So I think that we are still getting people line up and offer the asking price, but they are a little bit more cautious about the money they're spending. And I think that's across all markets.
And I think previously we were seeing a lot of people offer 6 months payment in advance of rent or more. Is that still happening as well, or is that pulled back because of affordability issues also?
Yeah, it's a really good question. I actually haven't seen that this year. This year I have not seen someone offer. They're offering in advance, but not last year. They 12 months in advance. I haven't seen that this year so far.
Interesting. So becoming a more normal market and the way a normal rental market would operate.
Yep.
So a little bit more affordable probably for people. And are some people, when you're saying they're adjusting their expectations, when the tenants are spending their money, do you think they're probably tightening up the pocket and saving that money a bit from going out and spending money to actually just getting a rental property to move into?
Yeah, well, a really good client of mine on the Gold Coast is looking for a place for his daughter, and he's looking for a unit at the moment, and he's blown away. Like, he can't find anything for his daughter. So that, like, it depends what market you're talking about. I think that anything under $1,000, and especially townhouses and apartments at the moment, are thriving. Like, if you're looking for a $400 to $600 a week unit or townhouse, this will be the toughest market you've ever had. But if you're speaking about an executive rental between $1,500 to $2,000 a week, it might be a little bit more difficult because people are willing to spend to have a little bit less and spend a little bit less, and they don't need the luxury of the stunning house. So it depends on that market.
So just quickly on that, then, now you're talking about the unit, townhouse versus house sort of market. I know you say that the unit market and the townhouses, they're moving really fast and trying to get them as well. The high-end houses, what about the availability of those? So when you look at availability for that high-end executive home compared to the availability of the units, are both available, or is there one's more than the other?
Yeah, they're both really tight. I mean, vacancy rates across all of them are really, really tight. So no, there's not one product out in the market right now that is that there's a lot of supply of. I think that they're all really tight. I think I say to owners with a property of $2,000 a week or more, no matter how nice your house is, no matter how big it is, there's just not many people in the market who have $2,000 a week to spend in rent, no matter what you've got. Regarding the $600 to $800 or $400 to $800 market, there's a lot more tenants who are looking in that space. So there's a lot more turnover. But anything like we haven't had one sit on the market for for 2 years, unless it's well overpriced.
Yeah, it's interesting when you talk about the change in the demand for different product types, and a lot of that is potentially driven by affordability. Rents have increased so much in the last 3 years, and especially in the last 12 months. And you mentioned that more affordable segment of the market seems to have really strong demand. We've reported in the podcast over previous weeks that shift in demand based on affordability for property buyers, where buyers are willing to make a compromise in how they live by looking at unit and townhouse style product over house style product to stay in locations where they're wanting to live. Do you think that shift in affordability and that high demand in that lower price point segment of the market is the result of a change in the shift of the product type that people are demanding?
Yeah, definitely. I mean, young professionals now, I know 4 or 5 years ago, they would always want a house. And now young professionals are really happy with a townhouse or an apartment. I've seen a big shift. You even look at the inner city ring, Hamilton and Newstead. 5 years ago, they were offering 4 weeks free rent to get tenants in there, and they're really, really tight markets now. So I think that the young professionals and the younger generations are definitely leaning towards townhouse and apartments, and also the older generations as well, where they don't want the yard to look after. They don't need all of the additional expenses to look after a house, and they're happy to downsize. And I think that's pretty reflective across the sales market as well, is that people are realigning those expectations and living more of a lifestyle.
Yeah, they don't want to spend their weekends mowing lawns and keeping the place tidy, but be able to go and have their coffees and live life.
Yeah, exactly. And it's been really encouraging to see that we haven't gone backwards in the housing market either. It just shows that the demand is continuing. Like, it's not, even though there's people shifting into those markets, we haven't seen a backward trend at all in the housing market either. And also off the back of all the relocations, we've seen this huge influx of demand. But now that there's not as much of that demand from interstate, the market's still really strong. It's not like there's been any backward trend. So I think that's really encouraging for the investors out there.
So from what you're saying, within your agency, you've seen fewer applications from interstate tenants that are relocating. And when did you start observing that trend where the interstate inquiries started to drop away?
Yeah, towards the back end of 2022.
Okay.
and not too much in very rare in 2023 so far.
Interesting.
Yeah.
Do you think that that's something, and it's possibly too early to tell, do you think that's a seasonal trend in that most people will make those moves at the beginning of the year in preparation for the school year? And off the back of that question, do you think that that's possibly going to change? Have you noticed any seasonal trend in past years, for example?
I think that the interstate immigration has softened, and I think it will continue to just stay steady from here. Because typically this time last year, we saw a huge influx of people wanting to move to Brisbane. So I think that it's normalized, it's steady. There still is people migrating here, but not those huge influxes that we saw.
Off the back of COVID. Yeah. Right, that makes perfect sense.
When you're renting properties out, Jonathan, obviously you do an appraisal on the property for the landlords. When you're doing that range, are you seeing properties renting out within that range, above it? I mean, rarely probably below it.
Yeah.
But how are you seeing that? Is it pretty consistent?
Yeah, it was really difficult last year to appraise properties because you didn't want to underprice them. And I always said, if you get 30, 40 people at a house, that's not a really good work of the agent. That's probably because they've underpriced it. So I've always said 6 to 8 is probably a really good number because you're getting a good amount of people to get good quality applications, but also know that you've got the maximum yield. So yeah, I think that it's a good opportunity at the moment.
Yeah, that's good to know. You mentioned that a lot of the growth in terms of the demand has come over the last 3 years. I've just been looking at the vacancy rate trends in all of Greater Brisbane, and that period actually aligns with the point at which vacancy rates dropped below 3% citywide. For those that listen to our podcast regularly, you'll know we often talk about a 3% vacancy kind of being a level market. There's an equal number of properties available as there are tenants looking. So anything less than 3% is a landlord's market where there's generally that upward pressure on rents. And we've seen that trending down since 2019. So it's not a surprise when we're looking at the data to see that inverse relationship between the vacancy rate trend and the increase in the rental price. With the vacancy rate as tight as it is now, and we're sort of trending sideways, not up or down, it will be interesting to see what happens to rents in the future, because there's only so high rents can go. And I think based on what you've said, there's going to be a point in some areas, especially where people can't afford to pay more for rent. So there's going to be a cap on what the market would be prepared to pay, regardless of what the vacancy rate for a particular area would be. Do you agree with that? And what are your observations around different parts in Brisbane or different locations within Brisbane in relation to where the affordability caps might be?
Yeah, I totally agree, Melinda. And I always think it'd be fascinating in a decade's time to see what rents we'll be getting in the inner city ring. And I'm not the right person to answer. I have no idea. But I just think that, it's going to be really interesting over the next 10 years to see how high these rents can go, especially Windsor, Wilston, Ascot, Clayfield. Like, can they get the same rents as Sydney? Will that be up at, a 5-bed, 3-bath? Will that be 5,000-6,000? I'm not sure.
And it's an interesting observation. So we look in-house within our business of trends over the last 10 years. And actually one of the things we capture at a suburb level is the change in the amount of rent that is achieved, in a particular suburb, and the change that's happened over a 10-year period. And generally, those inner city locations have higher rental price growth than those locations that are a lot further out. And, I've often attributed that to the fact that people that are in areas that are more affluent, that therefore the demographic have generally higher incomes, can afford to pay more for rent, and therefore we typically see stronger rental price growth in those areas where we've got capital growth drivers from a property growth perspective. Whereas in areas where you've got a lower socioeconomic group, people don't have higher incomes, they're going to hit those affordability caps much sooner, especially in an environment where we've got this high inflation and interest rates are increasing. So it would be interesting, and perhaps we have a conversation 3 years from now to reflect back on, which areas you've observed, have had the highest levels of growth, and then how that relates to what we've seen in the data, because I think that there's going to be some interesting trends that emerge in terms of which areas reach their affordability cap sooner than others.
Yeah.
Jonathan, you service obviously all of, and we service obviously Greater Brisbane City Council, I should say. You service a lot of areas. Are you seeing different areas? I mean, we talk about location. So when we're buying property, we really talk about location and being specific on those locations. Are you seeing different sort of parts of the market in the rental now that things are starting to normalise a bit? Are you seeing that some areas are a lot more popular? Is it getting closer to the CBD? People, you touched on earlier about that lifestyle. Is that so much stronger compared to other areas?
Yeah, well, it's been even, I remember speaking about Spring Hill when we were talking in COVID, and we had a 20 to 40% drop when COVID hit because all the short-term rentals went into long-term. But then last year that just got normalized. So it saw a massive increase to where it was. So that's normalized. So there was that. But then there was also the outer fringes like Griffin on the north side, those 20 to 30 kilometers, they went really, really strong last year because no one was building. So there was like this huge influx, but I feel like those, like what Melinda said, those outer rings or those high density, high supply areas have a lot more ups and downs. And then we've just seen over the last 3 years, those inner city rings just go from strength to strength. So I think that it's a lot more temperamental in those. And I've learned that over the last 3 years. I think that even if the building constructions get easier, then those areas like Griffin, when all these houses are flooded into the area, they'll probably see a drop again. There's no land in those inner city rings. So I can't see at all how those vacancy rates can increase.
Yeah, it's only if there's more high density supply that comes to the market. And of course, we saw that in Brisbane back in 2016. We had a peak oversupply in the inner city unit market. And you referenced some of those inner city areas like New Farm, and then there was West End and, Toowong, those sorts of locations had a huge rate of redevelopment, and a lot of new stock just couldn't be sold. And so it was put to the rental market and it couldn't be rented. There wasn't that demand there. And that's why there were so many incentives provided by developers just to get people in 1 month rent free. I mean, who wouldn't that appeal to? Especially if you're young and professional with a job in the city, living 5 minutes away sounds very convenient. It will be interesting to see how the trends, change as the supply and the development pipeline in Brisbane changes. But as you've mentioned, in the inner city areas, there's no cranes in Brisbane at the moment that are building these high density units, and the supply pipeline has dried up according to the building approvals and things like that. So it's a big moving cog to see future supply, and we're not seeing that anytime in the near future, certainly. So things are looking bright for those that are already holding assets in those locations from a capital growth perspective, but also from a rental growth perspective as well.
Yeah, I remember 7 years ago when I was working for a developer, and we got a rental lead for an apartment in Hamilton. It was, you would celebrate, you would call them straight away. You're like, I'll see you there this afternoon. So like one lead for a potential tenant was like the holy grail. Right. It was literally free internet. It was 4 weeks free rent. We would furnish your apartment for 12 months if you needed. To see where it's gone from 7 years ago to now is phenomenal. Yeah,
there might be a few. I know you talked about future and looking ahead. 10 years time, there might be a few units up for rent in Hamilton as well. When you talk about Hamilton, because that's where the Olympic Village will be, and there might be a few units coming up for rent down there then.
Exactly. Yeah.
So legislation changes. I know that this is something that's happened. We've probably touched on it, I think, around the last time we even chatted. The changes have happened.
Yeah.
It hasn't had an impact. I know there's things that have been changed with pets and leasing arrangements and things like that. Can you give us a bit of an update on that, and if there's been any effect?
Yeah. It's like New Year's Eve. You get all this anticipation, and then it happens. You're like, oh, that wasn't as exciting as I thought. But it's similar in regards to like the show goes on. We haven't seen any impact to the new legislation changes. I think from our agency, we spend a lot of time making sure that everyone's on fixed term leases. So if you're not on a fixed term lease, it might be a different story, but there's not one property in our agency that's not on a fixed term lease unless there's a reason and we've spoken to the owner about it. So that's probably the main thing, is to ensure that your property manager is really on top of that. And if you go from fixed term to periodic and you don't want to sell or you don't want to do a major reno, you could have some trouble getting that tenant out of the property.
That's good advice. And I guess it leads me to another question I'd like to ask you, because getting that sort of tailored advice as a landlord is really critical, because it helps you to make decisions around the asset that you've purchased, for your future. I'm assuming when people reach out to you and they're, I guess, interviewing you and your business about property management services, there's questions that you would frequently get asked by landlords before they actually engage you as their property manager. What are some of the better questions that you hear those landlords asking that help to differentiate some property managers from others that are working in the industry? Because face value, we think property management, someone's going to look after my property, collect the rent, and I'll get paid. But there's going to be a lot more to it, and different agencies are going to offer a different level of service. What do you think are the questions that landlords need to be asking to draw out the information that's important for them to know?
Yeah, I find it really interesting. And there's two types of investors, and there's the ones who have had a property manager in the past and they may have not had the best experience. And then there's the investor whose first property, or they haven't had a property manager, where the first investor I was speaking about, they are apples and oranges. There's so different levels of service in property management. The other investor thinks it doesn't matter which property manager you use because they haven't had that experience in the past. So the one I usually get the questions from investors who may have been burnt, who know the importance of a really quality property manager. And I think probably the first one is around advertising. There's a lot of different campaigns you can put. And I think the most important thing is finding a really good tenant. If you find a really good tenant, half the challenge is there. And there's a premier listing, there's standard listings, there's Domain, there's all these other websites. And when they say marketing's $200, $300, whatever it is, really understanding what does that get you? Because someone can say it's $200 for marketing. Well, what marketing campaign am I getting? Is a really important, and understanding what listing you get with realestate.com, how many open homes you're doing per week, and also what is that experience for that tenant? How do they apply? And understanding that whole leasing side of things, because that means that then you're going to attract the very best tenant, which will make everyone's life better.
That makes sense. Yeah. So understanding their processes, for you as a landlord, but also what is the experience that the tenant will be receiving? Because I can assume that there's some property managers that are very hard to deal with, even as a tenant, and that's not going to be perfect for you when you've got a property that's being managed by a manager it's very hard to deal with from the tenant's perspective.
Yeah, and how do you put that property in front of the best quality tenants?
Yeah, and I guess it also comes down to screening those tenants and understanding that process of how thorough is that screening process.
Yeah, exactly. And I think probably the second one is around the trades. Maintenance is a massive part of any investment journey. So making sure that the agency that you use has relationships with really good tradespeople is really important, but also understands quotes, understands when to push back on tenants, when it's actually a viable issue. I know that there are agencies out there that will take a clip off trades and do things like that. My personal thought process is the agency should get a cheaper price than if the owner went direct to that tradie. Because as an agency, we're doing so much volume, we should be able to say to our plumber electrician, hey, we'll give you X amount of jobs, but in return, we want a 10% discount. I know a lot of other agencies, the plumbers don't typically like working with real estate agents, so they add a 10% increase for dealing with the drama of it. So I think understanding to maximize your yield, understanding the trade side of things and making sure that you're getting quality work and quality pricing is really important.
Yeah, I think that's really important from a landlord, is like you've touched on, a happy tenant, low maintenance property, less hassles, a good property manager. It just makes life really, really easy. And it makes that investment less of a headache, which is definitely what you want. You don't want headaches when it comes to investing in property either.
Yeah.
And touching on that, I think the proactivity of a property manager in identifying preventative maintenance during inspection reports. And I know that that's something that you're very proactive on Jonathan, with your agency, because ultimately getting ahead of big maintenance items and preventative maintenance can save you money down the track. So identifying those things before they become problems is a huge, benefit to a landlord as well.
Yeah, I always say set your property up for success.
Absolutely. Makes perfect sense.
Any other questions they should ask?
Who are you dealing with in the agency, and understand, obviously, every agency, if you're speaking to the BDM who's signing you up, they're not the one managing it. Yep. which is fine, but maybe ask for it to have a conversation with the person who's actually going to be your point of contact, and just understand how much you'll get a really good feel of if they actually care about property management. But property management could be an arm to the business or the main focus. So I personally think you should be with an agency that actually focus on property management, because it's such a pivotal part of an investor's journey.
Absolutely.
Yeah, I think that point of contact is important, because that's the person you'll deal with. So you need to be able to deal with them well, and run that business together, and get on really well together.
Yeah.
So tell us a bit. You've rebranded away from Bell Estate, and you've rebranded to Housemark.
Yeah. So the main reason was, obviously, there is the other Bell with the E on the end. So we used to get lots of calls saying, "Oh, are you related to the other Bell?" People used to think I was the Bell because it's my last name. So we just wanted to really put ourselves as a specialist property management group. And if you see the caption, Housemark Properly Managed, the only difference between the properly and property is the L and the T. It's been really exciting, and really enjoying working under the new brand, and had some really positive feedback from owners, which is awesome. So
if people are confused, how do they get in contact? Because they're not going to contact Bell anymore. They'll contact Housemark. Is there something you can change the?
Yeah, it's a lot easier now. You just Google Housemark and you'll see it everywhere. On Facebook, Instagram, our website, lots of different ways to get in contact, and our team would love to support any landlords where we can.
Perfect. Jonathan, thank you so much for sharing your wisdom once again, and helping our podcast audience understand what's actually going on in the rental market across Brisbane. We really appreciate you coming on the podcast and sharing your time.
Yeah, thank you for your time, Melinda and Scott.
Thanks, Jonathan. Look, it's been great catching up again under a new name. So we'll continue that in the future and keep people up to date. Enjoy the normal part of the market, right? It's nice to have that bit of space and not be so hectic. I totally agree. So look, it's been great catching up again. As usual, I will let Melinda wrap it up for this episode, and we'll be in contact and talk again soon. Thanks very much. Bye for now.
Thanks, everyone, for joining us again on the Brisbane Property Podcast. As always, if you enjoy our content, please share this episode with friends and family, especially anyone that needs a new property manager in Brisbane, or any new property investors that are looking to buy in Brisbane. Reach out to Jonathan and his team at Housemark to see how they might be able to assist you. Until next week, I hope you have a fabulous week. We'll speak to you again then. Bye for now.